Happy Friday, everybody. Another week passed by. Aussie market has had an interesting week, so let's crack into it. We have spent a lot of the week working on our reversion strategies for the long-short Aussie equity fund as our primary focus. 5 big developments for this week. Germany's flash manufacturing PMI came in at 38.1. This showed another contraction after last month's reading as well. Quite the drop, and it really does demonstrate that the German economy to a recession, and the next lot of data will probably confirm that. This is the lowest reading for PMI manufacturing data since May 2020. French services PMI shrank to 47.1, again was further shrinking from the prior month of 48, again showing that the Eurozone is generally just contracting. We also had USCB consumer confidence. It absolutely soared up to 117 as a reading. The prior reading was a lot lower than that, down at about 110. And it just shows that the consumer in the US is continuing to spend money and continuing to remain positive and upbeat about the future. The ECB hiked interest rates by a further 25 basis points. That brings their interest rate up to 4.25%. This is interesting because despite inflation having eased throughout the Eurozone, we have actually seen the ECB continue to increase interest rates, which is quite different to what's happened in Australia. The first contraction in CPI reading that we've seen out of Australia, the RBA has essentially just stopped increasing rates and has gone to hold. The US Fed as well, you can see, also raised interest rates by a further 25 basis points, bringing the official rate over there to 5.5%, so much higher than it again that we are seeing here in Australia. At the FOMC meeting in the conference, Jerome Powell really reiterated that it is going to be data dependent, and just because they are starting to see inflation drop does not mean that they're going to stop increasing interest rates until they start to see inflation return to their target in the timeline that they have set up. Here we can see there is a summary of some of these global futures markets. We've seen orange juice have another big week. The most interesting thing in my mind is this movement in the energy complex of heating oil, gasoline, crude, and Brent, WTI and Brent. It's very, very interesting because if we are going to see a soft landing, generally it is not deflationary to commodity markets, and especially these ones that are key components of inflation. And this is what we're seeing at the moment. We're seeing a lot of commodities starting to rise and hit through new 20-week highs and 40-week highs, which is very interesting. This is similar to what happened in previous instances where there is high inflation, where the moment that we see inflation start to drop, people start spending again. They start traveling, they start flying, they start spending money broadly. And as a result of this, inflation starts to kick up again, similar to what we saw in the 70s. On the Aussie market front, it's been a relatively positive week, pretty much across the board. Westpac, ANZ, CBA, NAB, all doing very well. BHP, Rio, Fortescue, all again doing very, very well. This week, probably the standout was the energy sector, in line with what we've seen with the energy commodities as well. Woodside up 4.5, Santos up about 4.5. We also saw a little bit of weakness come into some of these lithium stocks as well. The trend barometer has just continued to stay up, where there is a good portion of the index or a good portion of the universe is trading above or below short-term trends as well as long-term trends, which is positive because it means the strategy for the multi-strat hedge fund is very, very active. Other than that, nice, short, sharp, and to the point. Have a nice week, and see you again next week.